Anka, I see you, and I'm really looking forward to talking to you and hearing about your journey and what you're doing now. So I'm now making you the presenter. Looking forward to hearing your voice, and you can share your screen so we could talk about maybe a few instruments that are on your radar. There she is.
Good morning, Dale. Just a quick sound check.
Yes, loud and clear, Anka. Very nice to meet you. Thank you so much for, thanks. Thanks for coming into our community today. And, you know, markets are pretty wild, so I appreciate you being able to take time away from the market to be with us for a bit today. I like to start from the beginning, and I went to your website. So you've been trading since '03. I'd like to know how that happened for you, how you ended up in the trading business, a little bit about the beginning of your journey, and then we could get to your, your evolution of where you are now.
Okay, first of all, thank you so much for having me here today and speaking to your audience. And I began trading professionally in 2003. So what that means is that I gave everything up, started my full-time career as an independent professional trader. And that was the point where I said, okay, this is it. It is, I'm trading my funds, I'm trading my accounts. This is for real right now. So before that, I was swing trading. So let's start with the beginning. I have graduated I've received actually a bachelor's degree in journalism and the science of communication from the University of Bucharest.
That was my major.
You really?
Yeah, and see, we both ended up in trading.
I know, and I think that's really good because we like to, kind of like build rapport with people. Yeah. And I think this is great. And after I graduated, I started working in the banking industry, and right off the bat, I was into an international division. And we were dealing with a dealing desk, with Forex, so with everything else. So I was very much interested in everything that was going on. And following my interest, I continued my education, but this time in the economic field. So I went for a master's degree in international transactions and foreign markets, and that is stock market and currency markets. And after I graduated, I became more and more interested in everything, in the whole process of trading. And I was literally exposed to a great environment while working in the banking industry. And I was in investment banking. So long story short, how did I come into trading? So having this interest, I kind of like developed, and I watched the markets on my own. And I watched to see how they develop. And I came in here in the United States in 2002. And from 2002, I continued to work once again for a big financial investment company in Detroit, Michigan. And that was the time when I was really exposed to hedge funds, and I was really exposed to a lot of trading the equities market, and swing trading and position trading, so active investing. So I was so attracted to this field, and I took a lot of classes here. Obviously, I took a lot of classes in Europe, and I have a lot of trading education that I have received in Europe and here in the United States. And it's a continuous process until you kind of like find your niche and find what you're looking for and find what your comfort zone is. Because to me, trading is all about comfort zone. And what really drove me to become a professional independent trader was first and foremost the commute. I was commuting literally about an hour and a half to go to work and an hour and a half to get back to work. And now for day trading, I actually trade less than I was commuting back in 2002. So that's a big plus for me.
Yeah. I love my commute. And which bathrobe should I wear today? And do I have to shave? So let me ask you, with all the education you received, and now you know you're on the other side of it, and you're coaching and teaching, did you have a mentor or anyone that was a major influence over?
Absolutely, absolutely. Yes, you have to have, like, without a mentor, I would have never been where I am right now. I've had the opportunity to have great, in fact, I did have 3 mentors that guided every single step of the way, guided my steps towards success, and also have drilled into my head constantly, you know, capital preservation, risk to reward, good trade and bad trade, photographic memory, try to remember a good winning trading pattern, try to remember, you know, how it feels to have a winning trade, how it feels to have a losing trade, psychology. So everything is so important to the development of the trader. In fact, one of the best piece of advice that I've received is that I should keep it super simple. The simpler you keep it, the better it is. Us as traders have the tendency to overcomplicate things, and we love to add all sorts of scenarios. Well, in fact, the first reaction that you have in front of a chart is the right reaction, is the best reaction, is the right thing that you need to do. Because if you look at a pattern and if you're trying to squint, or if you're trying to make up something that is not there, there's literally nothing there to trade. So keeping it simple is the best piece of advice that I have ever received, along with anything else. I am a really, I would say, focused technical trader, super technical trader. Obviously, I pay attention to fundamentals. I pay attention to everything that is going around. I pay attention to earnings, to economic releases, etc. But I try to navigate through these economic releases. I do not trade economic releases. I do not trade non-farm payrolls. I just wait for the dust to settle. I just wait for the first, second wave to settle, and then I can come into the market.
You could always go to the casino to play roulette and bet red or black, right? It's not.
I so agree, Dale. Absolutely, absolutely. It's like, what are we betting right now? Betting on red or betting on green? Are we going up or are we going down? So trading is not gambling. Trading is absolutely very technical and very calculated. And in fact, we have seen a lot of how technical this world of trading is. Not far, starting with February 2nd, when we had the first dip into the market, long-awaited correction. And now that we have the correction, and I agree, it was very violent, we're like, okay, so this is scary. Okay, so we wanted a correction. We knew that we were going to get a correction. The market was insanely running into new highs and new highs each day. I run a trading room, and I would go every single morning into the trading room for the last, I don't know, couple of months, 3 months or so. And I would open up the trading room and I would say, okay, we're starting the day. It's 9 o'clock. The Dow is up 320 points. What now? Okay. Yeah. So what are you going to do with them? Because I do day trade futures. My main focus is futures indices, gold and oil, but also for swing trading, I consider all the commodities that are out there, obviously indices as well. And then again, what do? You know, so you have to take it not only one day at a time, because this is what a good trader taught me, to take it one day at a time and to take it one moment at a time. So if you're a swing trader, the advice that my mentor gave me is not to watch every single tick that happens in the market. If you're a swing trader, try to navigate away. Don't even have smaller time frames on your home screen. Just make sure that you have the time frames that you're trading, the hourly, the daily, the weekly, and the monthly. And once you take a position, let's say based on a daily chart, on a daily setup, on a daily formation, just watch that daily pattern, because that is the pattern that is going to give you all that information. So don't try to take a trade on the daily chart and then try to micromanage it on a 15, because that
so let me ask you, Anka, here at ForexAnalytix, we showed how the VIX was not going down during the parabolic stage of the advance in the market. It wasn't trading at 9. It was sticky at 11 or so, with the market blowing off, which was unusual, and showed a chart of every time the VIX and the market go up together, it's normally close to it being over. What were you seeing in the market before we had this historic sell-off, besides it just continuing to go up, that gave you kind of a market tell or message that we could be drawing closer and closer to a two-way binary market and the blow-off might be ending?
That is a great question. First off, I've noticed the fact that there was something very odd that was happening prior to February 2nd. And things started to look a little bit choppy, and I do watch the VIX. And in fact, I do use the VIX to hedge some of my swing trade positions when I'm trading equities, swing trades and active investing trades. So at one point for about 4 days, we had the market grind higher, higher, and higher, and we had the VIX grinding higher, which was very odd at the moment.
You saw the same thing then? Okay.
Exactly. Yes. So it was very bizarre that they were moving almost at the same pace. And I was even watching the smaller time frames were pretty much doing the similar pattern. So I knew that something was going up, because the VIX do not just go up, you know, when the market goes up, right? It's a fear factor, and so when the market started to rally its last push to the upside, I saw the VIX stall. And then I saw the markets starting to reverse, because we didn't really reverse just right off the bat. So this was the first sign right here. And this is February 2nd. This was the first sign. The market was going, this is the first dip in the market and then the continuation. And in fact, this is an inverse trade. Let's say if we would have right now a similar chart right under this chart right here of the Dow or the S&P 500 or NASDAQ or whatever, one of the market indices, we would see that we would have a pretty much a same inverse pattern. So this was the day. This was the day. This is when I started to hedge some of my positions. And in fact, let's just put here, let's say the Dow, because the Dow had this parabolic move to the upside. So this is the infamous February 2nd. February 2nd came with a break of support here at 26,000 that accelerated lower, continuation lower in the next day. At one point around 23,000. Now this is the 200 moving average. 200 moving average was slightly higher, excuse me. And this was due to the fact, because it's a moving average, right? So that's what it does. It moves with price. So at the time of the price descent, it was hitting the 200 MA and bounced quickly off of that. Now, we have been, and pretty much it was a self-fulfilled prophecy in 2016 and 2017. And if there is anything that we have learned from those two markets, was that every single dip was bought. Starting with Brexit, continuing with the election, etc. Every single dip that we had in the market was bought. Now, the question is this dip going to be bought? Is this dip that happened right now in the market still bullish? Because if we look at the long time frames, you know, if you look, let's say on the monthly chart, you know, it's not significant. The drop is not significant. It does not take out the bullishness. We're still in a very strong uptrend. We just had a tap on the 10 EMA. And by the way, I only use a set of very simple moving averages, the 50 SMA, the 20 SMA, the 200 SMA, and the 10 exponential moving average, in case anybody has any questions in regard to this.
I wanted to ask you a question about the VIX, if you could go back to your VIX chart. Because I noticed that you, well, on the chart that you were showing before, you got rid of the tail. I think we spiked to 50. Any reason why on that day we spiked to 50, you eliminated the tail? Because that chart you were showing, it must have been a daily.
Daily. Okay, let's go back to the daily.
There you go. Okay, now it shows it, but it looked like it wasn't there, the tail at 50. What do you think the VIX is going to do now? My best guess is maybe back towards your moving averages. If we get through 25, back to 20, and then people kind of feel like, it was just, another aberrational event and feel complacent again. And then we get continuation in the VIX to the upside and in the market to the downside. What are you telling your trading room now to do with the market?
Okay, so first of all, we're day traders. We also swing traders, but yeah, for the day trading, let's say section, we take it one day at a time, and I will share with you and the audience what we're looking at. And in fact, I'm going to show you a quick sample of what we're looking at for today. That a lot of traders can actually take from, and they can use it, incorporate it in their technical analysis. So coming back to your question, I think it's very decisive. So right now the VIX is very neutral. We're trading inside yesterday's parameters. So at this point, we're very, very quiet. We're not saying, yeah, we're going to have the market to the upside, or we're going to have the market to the downside. So far the VIX is relatively quiet at this point. I'm going to put the VIX futures here so we can have a little bit more. I love to watch.
Oh, that's why. Okay, because VIX futures did not show the spike. This was the chart.
Exactly, did not show the spike to 50. That's right.
Yeah. Okay.
That's why I kind of showed everything. So far VIX futures right now trading at 26.95. And so we're trading within yesterday's trading parameters, yesterday's lows and higher. We're pretty right in the middle. So it's really not, it's not really decisive of where the VIX would like to go. Right now, they're a little bit bullish. That's because we have a little bit of red in the market. But as long as we don't take out the highs, the 28.30, we're still going to maintain these parameters. I think that we may have a chance, if we break the 24.70, to go back into the 22.30, back into the 20s, and let's say if the market decides to continue its rally to the upside, perhaps back into the 1750.
Oh, people would really get the all clear if we were down under 20. That might really make the market dangerous if that happens. So so you also trade crude. Like everything else, has been under pressure. We're trading under the $60 level. What are you seeing in here now? The trend being threatened, or should we be stalking longs for swing trades? What do you think?
You know what? I think that we're still in a very, I'm going to bring up the monthly chart. I think that we have bottomed out here in 2016 this is one of the temporary bottoms, let's say. And we have established higher lows and higher highs so far. We've had a tremendous rally, 1, 2, 3, 4, 5-month rally. Coming into January. February just took off January's gains, and it's trading at the December levels right now. So there's nothing major happening, and I think that we may still come into the 55.50 level. This is going to be decisive. This is going to make it or break it, because I expect a rotation off the 55.50 area. If we should pull in that far lower on the monthly chart, I think 55.50 area is a minor support area. Rotations at this point highly likely to happen if we're going to maintain this uptrend. And we also have this 10 EMA here. Tap on the 10 EMA into minor support. So we have a lot of things in our favor right here for a reversal higher, and that would actually represent the 4th higher low, which is really conducive of a break above 65 or 66 that we've just that's a phenomenal number, right?
Yeah, it comes up a lot. Yeah, I know. It was a low in the S&P in 08.
Right. And if we break up off this, we clear the way for a continuation higher. So we were due for a correction in crude. Definitely, we had the 200 SMA here. We had a really nice rally. Once we broke these highs of $55 here, it was poised to continue higher. I actually had a profit target on it. into the $63.64. It ran even further than that into 66 and change. Rotation happened on the monthly chart, but there's nothing very significant even on a weekly. Well, I agree, and moves tend to be a little bit more violent that I have noticed now. So volatility is a big thing, and I think one of the reasons why we get such volatility is because we have a lot more trading computers, HFTs that are trading, and it is a highly technical market. So they reach those levels, and we have the triggers, boom, 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 that are carrying the price lower. A lot of stop outs that are happening at that level. So that creates the flurry to the downside and to the upside. And even when the markets open between 9:30 and 9:45, usually there used to be like a 3 to 5 minute fleecing effect. Now that fleecing effect, due to the volatility, the balancing occurs now in the first 15 minutes. So it takes a long time for the market to calibrate before it actually sets up for a trend or for a push higher or even lower. But coming to crude here, I think it still has a lot of room to continue. Little lower, $58 into this area. I will look for rotation. In fact, last week I did make some posts on Twitter, and I was watching the $61 area for a possible rotation back to the upside as a possible buy. But now things have changed a little bit. We had a little bit more of a steeper pullback. We have the 61.8% here. I see this still as very bullish. So if the price will decide to reverse back into the $60 area, I will look for an aggressive swing off this level. And I will consider 58 as the stop. And in fact, I will zoom in for a tighter stop at the time of the trigger at a higher pivot.
Okay, you want to see confirmation. You want to see it do something right. Let me give you something a little old school. And I was talking about this in January, being an old commodity guy. There was something traditional called the February break, where every February air was taken out of commodity markets, which is what happened in crude. And I guarantee you after this February, people will be paying attention to that month going into the new year. So February break was definitely something that's, been around for decades and manifested. So February is a month not to be long much in my book. So what I'd like you to do now, Anna, it's been great talking to you. We know that people, in fact, I want to ask you, how did you come up with your handle, Trade Out Loud? Because you were shy and you wanted to learn how to assert yourself and express yourself? How did you come up with it?
Okay, thanks. I don't get that question a lot, but it came from the fact that I had a lot of people approach me because I was sharing my trades, I was sharing everything, because Trade Out Loud just came about in 2011. So I've been trading for a very long time before I came up with this education company. So in fact, I had a lot of people, come to me and say, okay, how do you do this? How do you do that? Can I trade with you? And at first, this is what it was. So I had a big hangout room, and I was trading with a bunch of traders. We were a bunch of professional traders, and we were, kind of like taking in, a lot of traders, and we were just, they were picking our brains, and I would walk them through all my trades, and I would walk them through my thought process, and that's how Trade Out Loud. So I was literally trading out loud. I was telling them, okay, what I'm getting in, what I'm seeing, explaining, because I think one of the most important reasons, one of the most important things when you're trading is to, even if you follow someone, is to understand why is that person getting into that trade, and just not trade blindly or have confidence in a person, but have confidence in the thought process and the analysis. And once you are in sync with that, then you can actually roll into the trade. Yeah,
because then you learn. If you're lazy and you're not learning, and whoever it is that you're modeling or copying trades from is on an island and not doing it publicly, you're lost. So that's a pearl, Anna, that Trade Out Loud is how you were mentoring people before you started your business. So if you'd like, you could show your website. I know the best way on Twitter, your Twitter handle, I just said it, is @TradeOutLoud. That's also the name of your website, correct?
Yes, that is correct. Yeah, I'll put it right here.
Okay.
Okay. So this is the website. It is tradeoutloud.com, and we're specialized in trading education, and also we're implementing what we're teaching on a day-to-day basis. I teach day trading and swing trading futures class. I love trading futures, and I'm also swing trading stocks and ETFs. So if you guys want to take a look, if you want to, cruise around the website, and if you have any questions, feel free to email me. info@tradeoutloud.com. More than happy to talk to each and every one of you. So thank you so much, Dale, for having me here today, and good luck trading, guys.
Thank you so much, Anka, and you're now my trading warrior sister. I wish you and everyone whose words you touch and are following you all the success in the world. So thank you so much for your time today.
Thank you so much, Dale. Thank you.
Very nice to meet you.
It was great meeting you. Thank you.
You're very welcome. That's a wrap, everybody. Kind of lighten up in front of the CPI tomorrow, and we'll see everyone for the CPI number. Should be a market mover. And most of all, remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Thank you again, Anka. And I'll see everyone for CPI tomorrow before the sun comes up in Southern California.